everyone, and welcome to this episode of Pod Save Chocolate. My name is Clay Gordon. I'm your host, and today is the September News and AMA Ask Me Anything episode of Pod Save Chocolate. So you can go into the comments, whether you're watching on LinkedIn, YouTube, or Facebook. I'm just checking down to make sure my microphone is working. YouTube, you can go into the live chat in YouTube or the comments in LinkedIn or Facebook. And number one, let me know where in the world you're connecting from. And if you have a comment or a question, or you want to ask me a question about anything having to do with chocolate or cocoa, you can get it. I will get it up on screen and I will share it and do my best to answer your question or respond to your comment. So please do that. And this episode of Pod Save Chocolate, like every episode of Pod Save Chocolate, is sponsored by the members of The Chocolate Life. And you can go to TheChocolateLife.com. Here is the homepage of The Chocolate Life right now. Right? And if you are not a member, you can click on the green button. You can sign up. There's always a free membership as well as paid membership tiers, and you can support the work that I do. Or you can go and like and follow and subscribe, hit all the buttons, I'll do all the things to share the Pod Save Chocolate and The Chocolate Life with the global chocolate community. That would be any and all of those things would be a great support for what it is that I'm doing here. But this is what we're talking about today. We are talking about, right? Just click on the post, and I produce a post for every episode of Pod Save Chocolate. So you can go here. It provides a run of show, the topics that I'm going to be talking about, and you don't need to copy the links or follow along too closely to get those URLs. You can just go to this page and you can follow. You'll have this links to everything that I'm going to be talking about today. So let's go and talk about it. I'm going to start where I often start, and I'm going to start with taking a look at futures prices, because I think it's important. If you're in the world of cocoa and chocolate, you should be doing this on a weekly basis. You could find out where does the market, where is the market, what are the futures, and where do the pundits think that the market is going. And so this is one of the things that I'm doing here. You can take a look at the cash price. You can go take a look for what the futures prices are, and you can get some commentary for what the traders or the experts were following. So one of the things that's unusual, this wasn't here yesterday when I was looking at it. December ICE cocoa contracts are down today. Prices are under pressure due to a stronger dollar, prompting long liquidations in cocoa futures. So it's interesting that the strength of the US dollar compared with the euro and the pound, which are where the two other major exchanges, is having an impact on futures cocoa pricing. But I think one of the things that you might want to do, and this is actually more interesting, is click on the links here and you can get to the price history. And let's hide that ad. And you can look at the daily price history. So here's what went on yesterday, and here's what's the day before. And you can find out how it's moving and get some idea of volatility. My subscription doesn't allow me to see volumes, but you can go back and you can look at this. And one of the things that I'm going to do is I can download this, and I'm going to at some point download this for the last 2 years. And I'm going to see if I can provide a chart of moving averages. So a minimum, a max, and all that other kind of stuff. So we can get an idea for how cocoa is moving. And you can do this as well. But one thing you might want to do is take a look over here on the right, where it talks about 52-week key points, right? So in the last year, the high was 12,646 US dollars per metric ton. The 52-week low has been 6,741. So the average is going to be somewhere between those two. But what are these things called Fibonacci's? What does that mean? What is a Fibonacci? And the Fibonacci is an algorithm that traders use to help them understand the likelihood. If it hits this price, right, 10,390, right, it means that this is an inflection point. This is a prediction of a price where it will trigger certain trading actions, right? So they might be shorting or hedging or some other kind of contract. So this is what that is. The Fibonacci 38.2, it says, okay, if the price drops below here, right, we're going to go figure these are going to trigger algorithmic trading is a good way to think about them. So the Fibonacci is a very, very interesting thing to look at. You can click on the see more here. This is at barchart.com. right? But you can see that the yesterday opened at 75.28. The high was 75.28, and the last where was the closing. So you can get an idea for where things are going and get an idea of the volatility. So it's bouncing it around somewhere between +1 to, let's see, -3%, +3%, -3%. It's still, when you're talking about $8,000, 3% is still a fair amount of volatility. So good thing to know about that. So do that, right? And understand that, at least right from the news that's supporting this, is that there's movement on cocoa prices with respect to what the US dollar is doing. Now, over at Trading Economics, right, cocoa futures rose above $7,300 a ton, supported by concerns over crop health in West Africa. The market may have been oversold amid weak demand. Worries about black pod disease, have added upward pressures. So you can, uneven rainfall with some areas receiving below average precipitation has also raised some concern, right? And so you can see, right, what the market thinks. You can see that, this 7,200 is way down from the high, which is above 12,600. But what we can do is we can go take a look and see what has happened in the last month, what's happened in the last week, and you can get an idea about the volatility. I mean, it's bouncing up and down, right? And why is it bouncing up and down? And the answer to that question is no one knows. Somebody will get a report about weather, somebody will get a report about disease, somebody will get a report about the change in the dollar, and all of these things are signaling to the traders, algorithmic, very, very often, and the market is reacting. But none of these are addressing, as I've talked many, many times here, about the fundamentals. And the fundamentals are, until there is systemic investment in cocoa farms and cocoa farming, right, and farmers, in particularly the West Africa cocoa belt, Cote d'Ivoire, Ghana, Nigeria, Cameroon, and the other countries, until there is systemic investment in the farms, replace aging trees, support them with new varieties, but don't plant monocultures. Until there is this investment, we're always going to be running the risk of the impact of adverse weather events. We need to make farmers more productive on less land, return a lot of that land through reforestation programs. There's a lot of things that need to get done. But until those activities are supported, this kind of volatility is not going to go away, because it's going to be based on very, very short-term thinking. What's happening next week? What's happening next month? What's happening in the next 3 months, right? It is unfortunate that this is what's happening. It looks like it might be, the price might settle down long term, looking a year from now, 2 years from now, 3 years from now, 5 years now. It might look down that the price is going to settle down somewhere between $7,000 and $7,500 a metric ton, right? And everything is going to be trading in that range for the foreseeable future, unless there is another major surprise. So we have another big adverse weather event that really does reduce the supply of cocoa. So what might do that? So news, right, is that the Ivorian mid-crop harvest is forecast at 400,000 metric tons for this year, down from 440,000 metric tons last year. So there has been some reporting that buyers are optimistic that the mid-crop harvest coming out of Cote d'Ivoire is going to make up for deficiencies in the last several years. That appears not to be the case. And so we have the impact of tariffs, the impact of weather, right? And does anyone have a clue? The answer is no, right? No one has a clue, right? And everybody is approaching this piecemeal. And that includes big chocolate companies, it includes the governments, it includes NGOs, and other members of civil society. Nobody is looking at this and saying, how do we address the root cause? Aging trees, aging farmers, right? Poor soil health, all of these things are contributing to the price that we're seeing today around the world. So unfortunately, we've got that issue. So let's talk about one of the important things, tariffs here. So some of the news yesterday or in the last couple of days was that cocoa and coffee are among new U.S. tariff exemptions. So the great thing about it is we've been worried about a 10, 15, 20% import tariff on cocoa and I believe derivatives. I'm hoping that it's derivatives as well. It just says cocoa. I heard some news, I heard some reporting that suggested that the reason why cocoa and coffee are exempted is, quote unquote, we don't grow them here in the United States. That's not strictly true. Puerto Rico is a territory and Hawaii is a state, and we grow both coffee and cocoa technically within the United States, but very, very small production. And so it's been exempted. Other things we don't grow in huge quantities in the United States include bananas. I don't understand why avocados are on the list. Mexico is a trading partner. Most of the avocados in the United States that are consumed, come either from California or from Mexico, but also cinnamon, turmeric, and a number of other spices are going to be exempt from import tariffs, including tea, green and black tea, cardamom, turmeric, nutmeg, and pepper. Things that don't grow very much have been exempted. So the good news is for chocolate makers that there may have been some products brought in to the United States on which the tariffs were already charged. It's going to be really interesting to see whether or not importers are going to be able to get rebates on those. I don't know how high it needs to go up to the chain. I can tell you that there's somebody out there somewhere that is betting that these rebates will happen and will find a way to profit from them. That's just the nature of the current administration here in the United States. That it could be that one aspect of the tariff strategy, right, around the notion of would the government be on the hook for rebates of tariffs that were paid before the policy was fully settled. There's a good chance that some hedge fund or somebody closely connected with the current administration, perhaps even at a cabinet level, is doing something which is underhanded. So they're going to profit no matter what. Unfortunately, that's the case, to the tunes of hundreds of millions, if not billions of dollars. It's just unfortunately the case. So that's a bit of news. Good news, right, for people in cocoa and coffee, that it looks like there are going to be no long-term tariffs imposed on at least cocoa beans and coffee beans. Again, we'll need to see whether tariffs on derivative products, cocoa liquor, cocoa butter, cocoa powder, and things like that have also been lifted. I'm going to see what it is that I can do and find out where those exemptions are. I'm not entirely sure. The big news, or some tranche of big news over the course of the last little while, and let me zoom this up a little bit so it's a little easier to see, is there's been a lot of merger and acquisition news, and some of it not demerger, pulling apart. And so Kraft and Heinz are going to split up. At least that's the news that launched last week. And so it's undoing of a lot of the merger activity that we've seen over the course of the last decade. Have these companies gotten too big? Are the shareholders not happy with the performance of these companies relative to their competitors? Are they finding that there are supply chain difficulties that are dragging the performance down? It's hard to know, but Kraft and Heinz are going to be split. Kraft has got a whole range of consumer products. They're in the confectionery business even if they don't have huge chocolate positions. But another thing that's a part of it is that Keurig Dr. Pepper, I don't remember when the merger happened. It's within the last 5 years, but have signaled that they're going to purchase a company called JD Peet's. This is a European based company, but they did buy Peet's Coffee out of San Francisco, and they're going to divorce. It looks so. So Keurig Dr. Pepper is going to acquire JD Peet's and then break up into separate businesses. Right? So they're going to have a coffee business and then a beverage. So two different beverage businesses, right? But again, the merger activity is to some extent a dismantling of companies. And so if you're interested in what it is that they're doing, I've linked to a page on the Keurig Dr. Pepper website, and you can learn more about it. What does it mean for chocolate? Not a whole lot, right? There's some coffee news in this month, and so I thought I'd point out to that. But it does signal what might be a much broader trend that we'll see over the course of the next several years. as we're looking at the impact of tariffs, we're looking at the impact of other economic policy, just we may see a major dismantling of very, very large companies where several years ago the goal was to merge companies. Now what we're going to do is we're going to split down into operating units which are much more focused, uh, so that operating losses in one part of the business don't pull down other part of the business. This might be a way of thinking about what's going on there. So Mars has been looking to purchase Kellanova. Mars is like the second largest candy confectionery company in the world. They're certainly in the top 10. I believe they're number 2 after Mondelez, but Mars is buying Kellanova. Kellanova is new Kellogg's. So after a rebranding, Kellogg's rebranded as Kellanova. It's passed antitrust scrutiny here in the United States, right? But the EU is still sitting on it. Apparently, there's some paperwork which the companies have not filed. The EU regulators are not very happy with that. So it's still on hold. There is a deadline by which all of this paperwork must be filed, but that hasn't happened yet. So the update is it's not off, right? Both Mars and Kellanova need to supply more information. So even though we don't think of Kellogg's as a big brand, they do produce, or a big chocolate brand or a confectionery brand, they do produce products that have cocoa and cocoa derivatives in them. So they are a large purchaser of chocolate. Mars is obviously a very, very large buyer of chocolate. They're in the process of investing, millions and millions of dollars in genetic research to produce. This is with a company called Pairwise, to use CRISPR technology to do genetically modified cocoa that they hope to get into production. And I covered that in a previous episode. While I'm really, really interested in the technology, I don't necessarily have anything against GM trees in production. What I do object to is planting large-scale monocultures, any attempt to invoke patent rights over this, because how do you keep one cocoa tree from pollinating another cocoa tree unless what they're doing is the trees can only pollinate themselves, right? That would keep pollen from a GM tree, which was paid for by Mars, to we don't want what happens in corn with Monsanto and their patents, where farmers are sued because pollen from a Roundup Ready species of corn has pollinated corn a half a mile away. We don't want anything like that. And then, of course, if Mars wants to get a government to be able to let their cocoa into the country, what I think is that Mars should cover all of the costs for lost productivity and new planting. So it's not just about supplying seedlings, perhaps for free, perhaps at very low cost. There's an impact to the farmer. If they take down 100 trees and replace them with 100 of these new Mars trees, it's going to take several years for those trees to become productive, and the farmers need to be compensated. So there are lots of wrinkles that need to be considered when it comes to taking a look at the idea of introducing GM cocoa into the world. But so Mars and Kellanova, I would need to go look, and will the combined version of these two companies be larger than Mondelez? Maybe. I'm not entirely sure, but it'll be up there, right? Really, really closely. And so while we've got Kraft and Heinz splitting and Keurig and Dr. Pepper splitting, Mars and Kellanova are merging. Now, also on the demerger side of things, Unilever is going to spin off its ice cream business, right, which is interesting. But Ben & Jerry's was purchased by Unilever many, many years ago. And what Ben & Jerry's reportedly has been very, very unhappy with Unilever management. And so they're advocating for either taking themselves private or spinning off separately in an IPO. But they want out of the Unilever relationship. Unilever has a number of big chocolate brands. Ben & Jerry's obviously use a lot of chocolate and cocoa in their ice cream, big company. And there was a relationship, I'm not certain if there still is a relationship, between Ben & Jerry's and Tony's Chocolonely, where Tony's Chocolonely, Barry Callebaut, was supplying chocolate to Ben & Jerry's for inclusion in some of their products. So there's a lot of moving parts, and that will keep you up to date on that. There has been a little bit of movement. There's a company called Hartree. They have primarily been involved in energy, but within the last year or so, since July, within the last 3 months, they purchased a big cocoa trader called a commodities trader, not just cocoa, but other food commodities, of ED&F Man. And it looks they're in the process of negotiating for the purchase of a company called Touton. Touton is a trader, French-based, French headquartered, but Touton handles 10% of the global trade in cocoa. So with a single purchase, Hartree can go from being basically a nothing burger in the world of cocoa to one of the dominant players in cocoa. 10% of global trade is about 400,000 metric tons. So it's about the entire mid-crop harvest from Cote d'Ivoire, controlled by one company, right? So we're going to have to see that. So we're seeing merger and acquisition activity on both sides, where big companies are deconstructing and people are getting in to see how they can profit from the business. It will be interesting to see. Part of that trend is Barry Callebaut. So I did an episode of Pod Save Chocolate a couple of weeks ago, and it was talking about, is Callebaut in crisis? Is the end of the dynasty? And in speaking with people, the answer is, it looks like Callebaut is spinning off underperforming or non-core assets. So if they've sold their Mona Lisa division off, or in the process of negotiating to sell their Mona Lisa division off, it looks like cacao berry distribution globally is going to be moved out of Callebaut, and it's going to be spun off into a separate company managed out of Paris. That Parisian subsidiary or separate company, not entirely clear what it's going to be, is going to handle distribution to the major markets that cacao berry services. So France and Japan, one other market which escapes me at the moment. And Callebaut itself has, in the last 2 years, has divested itself of 25% of its SKUs. So they're now producing 75% of the products they produced 2 years ago. And this is leaving a lot of customers who rely on specific products quite unhappy that they can't get at those products. Another signal that things are going on in terms of rebranding. Obviously, cacao berry is being spun off in a separate distribution company. But if you go look at the Barry Callebaut chocolate academies, they're all being rebranded as Callebaut chocolate academies. And so is this a signal that there is going to be a major rebranding where Callebaut drops the Barry Callebaut brand and it's shedding off core assets? And if that's the case, and it makes sense. I mean, the current CEO is Peter Feld. He came through the ranks of KKR, Kohlberg, Kravis, and Roberts in terms of M&A. So, buying out companies and then breaking them up into parts and then selling off the parts because they're worth more than the company as a whole. So is this whole process of Barry Callebaut selling off underperforming or non-core assets, this includes probably their nut business. So they have an ingredients business that they purchased here in the United States called Gertrude Hawk. I wouldn't be surprised if it's not been sold already and we just don't know about it, or they're still in negotiations to sell it. There's lots of stuff going on right at Callebaut. In which case, if it sells off cacao berry, I mean, its identity has changed. They still run the largest chocolate factory in the world in Belgium, but does it become a Swiss chocolate because they're headquartered in Switzerland? Does it become a Swiss chocolate brand as opposed to the quintessentially Belgian chocolate brand? Interesting thing to see how they go and navigate that aspect of their business. And who knows, what is going to happen? Who knows what is going on? But that's what it looks like, which does raise the question, right? Which is a very interesting one: is Barry Callebaut getting ready to sell itself? Right now, the primary shareholder is the Jacobs Suchard family, Jacobs Foundation, about 30% of the company. There's another family member who's got another 5%. There is an investment firm that owns another 10%. So almost 50% of the company is owned by fewer than, I think it's 10 companies. And so one of the things that KKR's own, again, takeover companies do is they buy companies and break them up and sell them, right? And it looks like what Callebaut is doing is just in the process of getting ready to sell itself. So here's an interesting question, right? Who would be the natural acquirer of a Callebaut, which is focusing on its core cocoa and chocolate operations as it's getting rid of other things, right? So we can see Cabosse Naturals being spun off, maybe. It's just we need to take this seriously and to think about, is there a company which is big enough to buy this company? And Callebaut may be big in chocolate, but in the grand scheme of things, it's only like a 6 billion Swiss francs in turnover. I mean, it's tiny in the grand scheme of things, even though it is a behemoth in chocolate. But somebody that would buy it would need to be somebody who's already in the food manufacturing space, right, or adjacent, that had a lot of experience in cocoa and chocolate, right, and would not be subject to antitrust, right? So, Puratos buying it when Puratos owns Belcolod, they would be a natural acquirer, but would it be subject to strict antitrust scrutiny, especially in the EU? We don't know much about them here in the United States, but they're huge in the EU. So who are they? Wouldn't be Mondelez. I don't think Mondelez wants to be in that business. I don't think Mars wants to be in that business. And I think that Mondelez and Mars would be subject to intense antitrust scrutiny. So who is the natural acquirer, right? Somebody has suggested that Hartree would be, but again, I don't know the answer to that question because Hartree doesn't have any background and experience in that aspect of the markets. And right now, Callebaut has fired something like 80% of all of its senior executives who have more than 5 years of experience, maybe more like 10 years of experience. I know that it's 80% of the long-term Callebaut management, like 20 years or more. Why are they doing that? Because those people are expensive, right? You can replace them with people who are much less expensive and call centers. And we're already getting news that long-term customers that have been buying products and buying products that are no longer available are now have nobody to talk to within the Callebaut hierarchy. They have to go through a call center. And so there's a lot of frustration. Why are they doing it? It's a lot cheaper to run a call center. It's a lot cheaper to fire long-term executives. And this is apparently a deliberate tactic of the current management. We'll figure it will. There will be some movement, I think, based on my conversations with people. We will know by the end of this year. So we'll know by calendar 2025 how much of what I just talked about is going to be a reality. Right? But if you are somebody who relies on a specific Callebaut product and formulation, right, you may want to start looking for an alternative supplier, right? Because in a new world where Callebaut sells itself to some new owner, there's no guarantee that the products you've been using are going to be there. That including alternative nut suppliers, 25%, right, of all chocolate products sold in the United States have some product from a Callebaut subsidiary in them, a Berry Callebaut subsidiary. And so whether it's a derivative, 100% of Toni Chocolat's business is dependent upon Callebaut. So it would be interesting to see what a new owner does with that. Lots of interesting things that are up in the air on the M&A and the op-ed part of things. I am, based upon the reporting that I did in this previous episode about Callebaut in crisis and what people have come to me and hinted at. I don't know how much of this is public information or non-public information. I'm saying this is what has been reported to me. I personally haven't contacted anybody who is associated with Berry Callebaut directly, right? And so I'm not trading on any non-public knowledge, right? Because they are a publicly traded company, and it's really important to understand that. So, along with all of that, right? So we've got this notice, as we've seen, that the Ivorian mid-crop harvest is forecasted, 10% down from the previous year. We have this news from Cargill that they're suspending cocoa grinding operations in Côte d'Ivoire for the first time in a long time, citing worsening bean quality, and my guess it's also supply. So the amount of the quantity, the percentage of defective beans that have been showing up to them, right? So it has grown from well under 1% to, I understand, somewhere between 3 and 5% on average. And what that does, excuse me, is it makes the cocoa even more expensive. You put, 100 metric tons of cocoa in, and then you're losing an extra, it may not sound like a lot, 1 to 3 tons, but cocoa butter and cocoa powder especially are very high volume, low margin businesses. And that 3% margin, if that's what it is, that reduction in yield can mean the difference between being profitable and not being profitable. And so this doesn't necessarily bode well for the industry at large that Cargill is suspending cocoa grinding operations. And and it will remain to be seen whether this has an impact on their cocoa grinding operations in the Netherlands and other places in the world, because they do have a big facility in Zaandam, which is in the larger port of Amsterdam facility. I haven't been there, but I have driven past it. The cocoa grinding capability is within the port of Amsterdam, Zaandam specifically. Something like 20% or 25% of the world's cocoa, right, could be processed in 4 or 5 factories. In that one location. It's really remarkable how much of the world's cocoa goes through there. But apparently Cargill is also investing in making that facility more modern. So there are a lot, again, I said there are lots of moving pieces. We'll see what it is that's going on. And then finally, for the market related news in that respect, is that Kit Kat, which is a Nestle brand, Kit Kat turned 90 last month in August. So if you're a big Kit Kat fan, happy birthday, Kit Kat. I'm not generally a Kit Kat fan here in the United States, but in Japan, where there are like a gazillion different flavors, it's a lot of fun to go and try those different flavors. I try to avoid Nestle products in general, but they're a red bean, or they have a toasted white chocolate, or the like 7 different varieties of matcha that they got. They probably do a hoji cha, all kinds of stuff. And then of course there's the Kit Kat chocolatory store in Tokyo, where you can get Ruby and a bunch of other special flavors, paying $2 to $3 per single stick of Kit Kats. It's really, really quite remarkable with the Japanese. But Kit Kat turned 90 this month, as Nestle just sacked the second CEO in 2 years. Apparently there was some impropriety. This Nestle CEO is alleged, I don't know if it's been proved, to have had an inappropriate relationship with an underling, and the board got rid of him. They may have identified a new CEO. I'm not entirely sure, but these things are completely coincidental. But that kind of management uncertainty at the head of any global company is never a good sign. So something to consider there about what's going on at Nestle. And with that, sort of out of some of the hard market related news, I'm going to spend the rest of the episode talking about some other things. The first one of which is a gentleman came to me a couple of years ago, I think, and talked to me about a project to build biodiversity corridors in Latin America and other parts of the world, as a part of a project to also do sort of to protect, as it says here, protect vital ecosystems. Let me scroll up. Protect ecosystems, driving rural innovations through community-led biocultural hubs. And so it's an interesting project. One of the things which is really interesting about it is the opportunity to invest in it using cryptocurrency, using not Bitcoin, but by using NFT, non-fungible tokens, right? And so your support of the project will be put into an immutable blockchain, and it will so you will be able to see the impact, and it will be memorialized. And as it's an NFT, if you want to sell it, you should be able to sell it to people in the record of who the owner of these things is. So it's an interesting opportunity. It's an interesting project that they're looking for funding. If you scroll down this page, you can learn more about the project. They have these things called stewardship NFTs as blockchain verified contracts that give fractional rights to protect ecosystems on tokenized plots of land. And so here are different levels. that you can support the project in. I mean, it would be interesting if you're interested in doing this. What I may do is I may do something like a GoFundMe to see if we can raise $5,000. So as a group, the Chocolate Life and its members can have a Jaguar level NFT. So if that's something that interests you, let me know, and I will go and do that and see what it is that we can do about supporting this project. I think it's very cool. If they can do it, the first location of the Biocultural Hub is in Colombia. And my understanding is they want to do a biodiversity corridor that stretches from the Atlantic to the Pacific to the Atlantic. So they provide a place where species can travel unrestricted, and that the original biodiversity of the forest can come back into course. And there are also some things you get if you want to go visit. You get discounts on accommodation and meals and all that kind of stuff. Go and look at it. It's an interesting project that they're trying to do. And I have, because I know the guy who started the project, I'm going to get him on as a guest on a future episode of Pod Safe Chocolate. We're going to talk about what they're doing specifically. In coffee news, right? We're all interested in genetics and things like that. There is a variety of coffee called Liberica, and it's had some sub-varieties. But recent news is that Liberica and Excelsa are separate species, which has implications for cultivation. And so if you are interested, because coffee cultivation and cocoa cultivation are linked very, very closely in many parts of the world, right? Understanding genetics, right? And what genetics will deliver to the flavor of final products, and understanding how different genetics may require different agricultural practices is really important for growth. So if you are interested in this notion of genetics as they apply to cocoa, reading this article will be very interesting, I think, for many, many people. There is the distribution here. And, is it a flavor variety? So is it more like an Arabica than a Robusta? All kinds of interesting questions. There's a link to the original study, which was published in Nature Plants. So you can go and take a look at that study. So so it's very, very cool, right? I found it to be very, very interesting. And so I posted it here. So, and to be truthful, while I knew about Liberica and Excelsis, I'd never heard of this variety called Kleine. I don't know if I'm pronouncing it properly, right? But there you go. Also in coffee news, and this has implications in cocoa and chocolate, is around the Q grading system. So the Q grading system, since its inception, has been run by an organization called since 2004, so 21 years, by the Coffee Quality Institute. And it's run the standardization process, and it's the one that hands out licenses so you can become a certified Q grader. All of that has been run by Coffee Quality Institute. And what has happened in the last week or two is that the Specialty Coffee Association has come to an agreement with the Coffee Quality Institute, and the Specialty Coffee Association is going to be taking over the Q grading system. We don't have anything like that in chocolate. There is no one certification standard where you can go and become a certified taster. Now, the International Institute of Cocoa and Chocolate Tasting, or Chocolate and Cocoa Tasting, is probably the one which is most widespread. However, it is proprietary and not open, right? And so my preference would be to go with the system which has been developed by the Cacao of Excellence. But to the best of my knowledge, there is no certification system around the Cacao of Excellence protocols. And it would be great if somebody stood up and funded a nonprofit like the Coffee Quality Institute, let's call it the Cocoa Quality Institute. And its job is to license professionals who want to be cocoa graders using the Cocoa of Excellence standard. Right now, that doesn't exist. But what's happening here, and if you read the article, there's a lot of concern about what will happen to the Q standard now that it's owned by the Specialty Coffee Association, or it's being managed and run by the Specialty Coffee Association instead of the Coffee Quality Institute, because they serve two very different purposes. The Specialty Coffee Association and the Coffee Quality Institute uh, serve two different audiences. Even though there is a very, very strong relationship between the two, the business objectives of both those organizations is very, very different. And so there is the possibility of some really serious implications for what's going on within the world of cocoa and chocolate. So keeping on top of these coffee-related um, coffee-related notifications and updates, things that are happening in the industry, are things that we in chocolate and cocoa need to pay attention to, because it may not happen for 3 years, it may not happen for 5 years, it may not happen for much longer. But one of the things that needs to happen in cocoa is there needs to be a standardized system for evaluating cocoa. And one of the things that the cocoa, the Cacao of Excellence project does is it evaluates cocoa in terms of finished chocolate. Now, coffee is easier. Cupping coffee, right, is a whole lot easier. It's shorter. The amount of work that needs to be done to roast and then get it to roast and then grind and then put it into a cup and to cup, that's very, very short. You don't necessarily evaluate cocoa beans as beans. You want to evaluate cocoa beans in terms of finished chocolate. So they're very, very different protocols involved. The process takes much longer. Excuse me. But there is going to be a knock-on effect from the SCA and the Coffee Quality Institute and getting together in cocoa. Again, I don't know if it's going to be next year. I don't know if it's going to be 3 years. I don't know if it's going to be 5 years. But this new relationship is going to, it says, but a shocking and much criticized takeover is about to change everything. Will we be able to tell the difference? And this is in Slate. The link to that is in the post for today's episode right here. The backbone of coffee standards is about to break. Another bit of news. This is out of confectionery news. Now, you can sign up for free. You can register for free, which gives you the right to take a look at unlimited of these articles. And I've been linking to confectionery news articles for some time. There is some limitations in what confectionery news done is they don't do a good job of citing sources. They're much better at reporting press releases than they are at citing sources. And that's true. If you go to confectionery production, you go to international confectionery, they tend to report press releases straight without doing any additional researcher to verify what's going on and then to provide analysis of it. Right? They tend not to do that. But when you're talking about using a sweetener, whether it is a straight sugar, if it's an alternative sugar, so which might mean coconut sugar or panela or some other form of cane juice or replacement, then there's this whole range of artificial sweeteners, right? So, you can get an idea. Consumers distrust sweeteners generally, especially those seen as synthetic, right? Health concerns, including links to metabolism issues, sugar-free labels often reduce perceived taste and enjoyment, right? And so shoppers prefer clean label products. Chemical sounding names lowers consumer confidence. Social media misinformation is worsening the skepticism. So it's increasing the skepticism about non-sugar sweeteners, and brands risk losing customers if they don't balance health and taste. So as you're doing new formulations, as you're looking for the cost of sweeteners, this is a very high-level overview, right? And it would make sense to go take a look at these things because you're going to need to communicate with your customers about the impact of this. And so what you want to be able to do is understand the concerns and be able to address the concerns directly about why you're using a particular sugar. It could be just for taste. I mean, if you're looking for the most neutral taste, then white sugar, refined white sugar is the most neutral taste. Probably not vegan. If that's an issue for you, you're going to have to go to an unrefined sugar. If you're looking to do a low calorie sugar replacement, you're going to want to know what this article says is here are some of the most common objections that consumers have about artificial sweeteners and sweeteners in general. So taking a look at an article like this may help you understand how to formulate answers to questions, right, that your customers are going to have, right? I love confectionery trends articles. So top confectionery trends for autumn and winter 2025. And what are they? They haven't changed very much, really. So functional. People want protein in their chocolate bars or their candy bars. People want caffeine in their L-theanine, all sorts of things. So functional chocolate bars, health boosting, whatever that means, right? In their confectionery, but let's just talk about it in chocolate. So indulgence, consumers are seeking comfort through rich gourmet treats. This is probably one of the reasons why people are moving towards quote unquote Dubai chocolate. So many people know about peanuts in chocolate, or they may know about hazelnuts in chocolate. And so the idea of pistachios in chocolate, if you're somebody who's been involved in the gourmet chocolate industry for any length of time, you know the pistachios have been around since forever. One of my favorite chocolate bars, candy bars in the world, is made by Francois Prilou. One of their bar infernal is pistachio based, and it's insane. Although they don't have knafe, they don't have the phyllo dough in them. From a pistachio paste perspective, if you like it, it's a very, very pure expression without the textural component that the knafe adds. But they're looking for gourmet treats. Yeah, that makes sense. But we've got this conundrum, even though it may be a trend. I don't know of many chocolate products other than Dubai chocolate products which are able to command the stupid premiums they're commanding. I mean, Lint's bar is what, 100-gram bar is like 140, no, like $14 a bar, $18 a bar, where their standard bar is like $5, right? Where's the premium that's going there? So, right, which ties into the next things, which has to do with premiumization, right? But high quality. Well, we can talk about high quality when it comes to something like Dubai, but visually appealing. I mean, there's a lot to be said for a real thick Dubai chocolate bar, or a pistachio paste, or even almond or hazelnut or macadamia paste filled bar. You break it the way you do. You've got a wonderful cross section. It's this, with pistachio, it's this interesting green color, which you might not get someplace else with another product. And so that's what's going on there. So they're looking at that. So exotic and global flavors are trending. This is nothing new. This has been something that's been happening for years, right? That people are looking for the fusion of flavors which come from Japanese culture or other Asian cultures, flavors which might come from North African or Middle Eastern, and how do we move them together? So particularly, right, one of the things about Dubai, quote unquote Dubai chocolate, right, is that it combines three of these flavor trends: indulgence, premiumization, and flavor innovation, right, for most people. And that's, I think, one of the reasons why it has some legs, or it's lasted longer than many people thought it would. And then finally, we're heading into Q4. And so one of the trends is Halloween and Christmas. What are we doing there? But again, there is a little bit of explanation, such as the power of the trend of functional chocolate, functional confectionery, that the market is now worth 64 billion euros and is projected to hit 137 billion euros within 8 years. So if you are a chocolate maker, right, a bean to bar craft specialty chocolate maker, right, one of the things that I have always said to you, or I've always said to you, if you're watching, is if you're not making a salted butter caramel something, you're leaving money on the table. And so the question becomes here, if functional chocolate is going to be such a big market, do you need to produce something that can make a functional claim? Is it caffeine enhanced? Is it protein enhanced? Are there ingredients that will help you calm down? Are there ingredients that will help you focus? Chocolate is a great delivery vehicle for many of those kinds of ingredients, in part because the chocolate can mask bitterness, right? So something to consider if you aren't doing it already, right? So if you don't have a salted butter caramel in your product line, you need to do that. And what you also want to consider is doing something. I wouldn't convert your entire product line into functional, but functional products, you have an ingredient which may be less expensive than cocoa. and it can justify a higher price. So thinking about doing something functional is not a bad idea, right? I just wanted to point that out. Indulgence, consumers are seeking through luxurious gourmet ingredients and adventurous flavor profiles. That makes sense. So many of these flavors and many of these ingredients are less expensive than cocoa. So if you're struggling with the high cost of cocoa, looking for luxurious gourmet ingredients that may be less expensive than cocoa and provide flavor innovation is a good way to be able to address some of the concerns you're having about the inflationary costs of cocoa. Premiumization is particularly true in confectionery, where high quality ingredients and artisanal production methods are increasingly sought after. So if we think about these things, functional and indulgence and premiumization, how do you bring them all together, right? You want to think about how do you bring them all together, incorporate them into the brand promise that you have and your marketing around the products that you're making. So because what you can do is more consumers are willing to pay premium for products that not only taste good, but look good. So let's highlight that for you. So that's an important reason to do it. So if you've already got a premium product, you can increase the premium, right, through perception, right? And you will also enter into new market, right? So from Dubai chocolate to Angel Hill chocolate to matcha flavored, everything, right? So, I mean, again, what this says is if you're not doing something with pistachio paste, maybe it's not Dubai chocolate, right? But it's something like that. Um, maybe could you find other crunchy elements besides kanafe that would work, that would provide a similar kind of experience? Might you use macadamia nut paste or pecan paste rather than pistachio paste? Are there ways to use other flavorings which bring in exotic? So are there any Asian flavors, for example, that are complementary with something like this, would provide a new flavor experience? For example, could you do coconut and pistachio? I'm sure there's a way you could do it, but what that would be, for example. So think about those kinds of things. People want that, exotic flavors inspired by different cultures. These just provide some ideas for direction. But while I think it's surprising to everybody that the Dubai craze is still crazed, that there's still this market for it, that there is something there that people are looking for, and finding a way to capitalize on it is probably something you want to consider doing. That's that. So that's confectionery trends. But here's some counterclaims. One of the things, so this is expert warn of major disappointment for chocolate lovers this year. We either reduce the amount or remove it altogether. And that is hazelnut supply. So this is particularly with respect to Turkey, but the analysts who follow the hazelnut crop, of course, there are analysts who follow the hazelnut crop, part commodities traders and things like that, that the output from Turkey will drop from 700,000 tons to 450,000 tons. So a drop of 250,000 tons, which is over a third, right? Which means that hazelnuts are going to get more expensive. Even if you're purchasing from Italy, Piemonte, or from Filberts from the Pacific Northwest. In general, a constriction of supply is going to affect the price across the board. So that's something to consider. So, for example, one large Turkish confectionery firm they're going to reduce the hazel content in some chocolate bars from 30% to 10%. Okay, if you're doing a gianduja or some sort of praline, this is something to consider. As the price of cocoa goes up, the shortfall in supply in hazelnuts in Turkey is likely to drive up the price of hazelnuts everywhere in the world. Right, so something to consider if you have a product line which is very, very heavy but dependent upon hazelnuts. Something to consider. And then finally, for today, is this final one. Another reason to worry about the longevity of the Dubai chocolate craze is that here in the United States, a Dubai chocolate brand, which is sold at Costco, is being recalled over an ingredient that can pose a health risk for people with allergies. And this is something we all have to be very, very concerned about. So it said gluten rather than wheat, an error that appeared on the allergens description. So gluten rather than wheat. So this refers to the knafe, the crispy element, crunchy element that's in the Dubai chocolate. You need to be very, very careful. If you're going to be making it, you need to be careful. Will people be more careful about purchasing generic brands, Live Life Happy, Rolling Pin, Dubai style chocolate, right? Not entirely sure, right? But you do need to be careful if you're doing these kinds of products, to make sure that when you start including common allergens, you need to make sure that you declare them properly, right? And I am sure that there are a lot of people who are Costco members who are looking at Dubai chocolate. They've heard about it for the first time. They're not entirely sure. They've been at their local grocery store or their local pharmacy here in the United States, CVS, Walgreens, someplace like that, Walmart, Safeway, Fry's, wherever they are, and they've seen $14 or $15 or $17 for a bar of quote unquote Dubai chocolate, Dubai style chocolate. They go to Costco, they find a bag of what appear to be small pieces, right? Rather than a whole bar. They try it and they get sick, right? And we need to be, so there is a feedback cycle which is going to happen. Is this going to knock consumer confidence? It may be, because people who hear this are going to worry about Dubai chocolate not just generally being safe to eat. And that's it for today. This is the September issue of the September News and AMA episode of Pod Save Chocolate. My name is Clay. I am the publisher of TheChocolateLife.com. And let's go look at the homepage of TheChocolateLife.com very quickly, because this episode of Pod Save Chocolate, like every episode of Pod Save Chocolate, is sponsored by members. People like you who are watching this. If you're not already a member of The Chocolate Life, you can click on the green join button, which appears at the top of the page. There's always a free membership, but there are also membership levels which include things like coaching and consulting hours, right? By signing up for one of these premium tiers, what you're doing is you're making every episode of Pod Safe Chocolate possible, and by giving me the time and the freedom to go report on items and do the writing and the journalism and the tasting that I'm doing on these topics. So please go there. But if you're watching on YouTube, please go click on the like or subscribe, do all the things about notifications, all the bells, all those sorts of things. That'll be great. All right. And then if you're not following me on LinkedIn, you're not following me on Facebook or the Chocolate Life page on Facebook, go do that. All of that stuff supports the work that I do here. And with that, I will be back. Today's Friday. I'll be back this coming Tuesday. Is today Friday? Yeah, today's Friday. I'll be back this coming Tuesday with another episode of Pod Safe Chocolate. I'm not entirely sure what I'm going to be talking about. A week from Sunday, the 21st, is the monthly member AMA. So this is a 90-minute call, which happens on a Sunday. You can call in, and sometimes it's just me and one other person on the call. And so we can have what amounts to some free consulting time, where we'll be talking about things which are of interest to you. But you have to be a member in order to be able to read the newsletter to get the link for the episode. So go do that today. And with that, I'm going to end today's episode, as I always do, with a reminder. If you're working with chocolate and you're not having fun, you're doing it wrong. Until the next time, everyone, ciao.